So have you wondered when is the best time to start investing? When I was a lot younger, I thought the best time was to be when I started working, because it made a lot of sense, right? We didn't have a lot of money to begin with, and the important thing to do when you're young is to spend time with your friends, and that's what I did. So fast forward a few years, I put some money into the crypto market that allowed me to earn a little bit of money, that made me realize that to be ready to invest, you really have to be ready. Then the next important question is to know, when are you ready to invest? Hey guys, welcome to another episode of Money Monday. If you are the first time watching this channel, I talk a lot about personal finance, investment strategies, some financial concepts that could help you with your investment journey as well. So in this episode, we'll be talking about some investment mistakes. I myself have committed some of them as well, but these actually make me a lot stronger. They taught me things about life that I didn't know, and I just hope to share this experience with you guys. If you guys have made these mistakes as well, let me know in the comments below. Or if I've missed out mistakes or mistakes that you have done but it's not covered by me, do let me know in the comments below as well. So these are some questions to ask yourself to prevent yourself from making these mistakes that I myself have committed and people around me have committed as well. I paid for that in terms of tuition fees, so let's get on with it. And mistake number one is people do not clear their debt. So what is considered a debt is actually things that you're paying for monthly that you have to pay for, be it good times, be it bad times, be it whether you have a job or you not have a job. These are things that you have to pay for. So some examples could be your housing loan, your credit card bills if you have some that are outstanding, your car loans as well. So all these are debts that can actually bring down your investment earnings that you're trying so hard to build. If you are gonna invest with that, you might be getting a negative yield every single year instead of getting a 1%, 2%, 4% or 5%. You might be getting like a -3 because like compounding interest, that works the same, and the longer you owe it, the longer it rolls, the more you're gonna owe that person or that financial institute or that bank. So some of you watching this video are gonna be like,
oh, but we need that to survive because we didn't pay $300,000 down payment for a house. And then I need a car for work. How can I survive without that?
I'm not saying to pay off all those debt before you even start investing, but your debt has to be manageable as well. Definitely there are some housing loans that you have to pay for sure every single month. But make sure you're not late on your payments because those will incur additional interest that might not be advantageous to you when you're gonna start investing. So what you need to do is to make sure that the income that you bring in every single month, for example, you bring in $5,000 a month or $3,000 a month, and if your debt is $2,000, you have to make sure that you have enough money to go through the month for your food, for your water, for your daily necessities, and enough to actually pay off your debt as well. And then you just got to save as much as you can. If possible, try to reduce your expenses and try to increase your income. Getting a second job or getting a side hustle. All these can help you, get rid of debt a lot faster. And the faster you are able to manage debt, you are able to start investing properly without any worries. Okay, so mistake number two a lot of people did or commit is that not having enough savings. So the ideal number is to have at least 6 months of income or 6 months worth of salary set aside just in case you lose your job. So like in the current situation right now, unemployment is at an all-time high. I think for Singapore it's hitting like 14-15%. In the US, like 33 million people are reporting job losses. These are not good numbers. Nobody wish to be in this position as well. Imagine if you have 6 months worth of income that could actually tide you over these 2 months of shutdown, lockdown, quarantine, and you're still pretty comfortable because you have 4 months left of income to tide you through the next 4 months. And ideally, why people put 6 months is because in bad times like this, people might not be hiring. So some of you might go like,
oh, but it's a financial crisis right now and no one's hiring, I just lost my job. How can I even save more money?
So here's my thought. If you are put in a situation that you really have to bring money in to feed your family or put food on the table, ideally you should do 2 things. Number one is to find a job that you're able to bring in some money for this period. And number two is to reduce your expenditure. There are many ways to do it. I will not go into detail, but those are things that you have to figure out yourself. So the next mistake that a lot of people commit is not knowing which asset class to invest in. So for asset classes, this could be things like real estate, bonds, mutual funds, stocks or shares. So you have to be really clear on what you are looking to invest in. For example, if you're looking to invest in property, if you're starting out young, this might not be the best way for you to grow a good stream of income, because property requires a high capital outlay. That means you have to put in 50,000, 60,000, 70,000, depending on where you are. This number increases or decreases depending on the region that you stay in as well. And to buy a good property, you probably need to have a lot of money to buy in a prime area that is able to provide you with rental income. So knowing the asset classes is really important. So like for me, I actually pick stock and shares and cryptocurrencies because these are things that are within my reach. Given my current situation, I'm able to put in money every single month to purchase some stocks or to purchase some cryptocurrencies if I'm looking at some. You know, it's not the best for me, but I think it's something that works very, very well with whatever situation I'm in right now. So I believe that you should be able to find something that suits your appetite as well. The last mistake that a lot of people commit is not giving your investment time or not knowing which stage of life they're at. So for example, if you're at your retirement age, I don't think that you should be investing in cryptocurrencies because the risk is too high. It's not something that you would want to put all your money into or risk your retirement fund with, because if you lose it, you know, you're more or less settled for life in a negative way. But as compared to a young kid who's just starting out, if you're like 20, 25 or 18 years old, if you want to dabble in cryptocurrencies, go ahead, because you still have time in front of you to actually try it out. But do not take this as financial advice. This is my own personal opinion. And many people think that you can actually earn a lot of money in the stock market, which is true and not true at the same time. Because people always think that, oh, you can always buy low and then you sell it at a high. But here's the thing, it is impossible. Let me tell you one more time, it is impossible to time the market. So I learned these two concepts that I can share with you guys is that it's not about timing the market, it's about how much time you are in the market that gives you the most growth in the long term. I've read some articles out there and they did a comparison of somebody who is buying and selling in and out of the market as compared to someone who is constantly investing into the stocks that he picks or stocks that he's very confident of and reinvesting those dividends or reinvesting those profits into the market again. You know, the growth is actually a lot higher if you are constantly investing and not going in and out of the market, because if you are going in and out of the market, the risk of you losing your profits is very high as compared to you constantly investing into the market. So another lesson I learned from the stock market is that cash is useless. So if you do not use cash, basically cash is just, you know, a piece of paper. This $50 will still be $50 tomorrow unless I use it to buy something that I can sell for $51 and then this becomes useful. Otherwise, if this is sitting in my wallet today until the next week, it's still gonna be $50. So I'm not saying use up all your cash, but ideally you might want to make sure your cash is working as hard as you are working to earn more cash. Investing in ETFs, into dividend stocks, into bonds could be things that you can look at as well. So I have links to the other videos that I've done in the description. It's a video about the different kind of stocks available out there. You can learn a lot of things from that. So if you have enjoyed this episode, do let me know in the comments down below what are the mistakes you have made when you first started investing. If you have not liked the video, do drop a like. It helps the YouTube algorithm a lot. And if you're not subscribed to this channel, do hit the subscribe button down below, and I'll see you in the next episode. So in today's episode, we'll actually be talking about some investment